It's the best day on Wall Street in weeks as a barrage of good earnings reports and some good economic news put investors in a buying mood. The Dow climbs more than 140 points and the Nasdaq gains 37. We'll get some analysis on where the markets could go from here.
And heavy metal pays off for Caterpillar. The mining and construction equipment company turns in one of those good earnings reports. Cat's first quarter net income is up by more than 200%.
From tacos to chicken to pizza, Yum Brands has more than 30,000 fast food restaurants in more than 100 countries. Today, its stock was moving fast on the upside and hit an all-time high. We talked with the chairman and CEO, David Novak, about the company's outlook.
And if you like to watch the news, here's a watch to watch. Headlines, sports scores, weather forecasts, even stock prices can be found right on your wrist.
I'm Linda O'Brien.
And I'm Jeff Yasteen. This is Nightly Business Report for Thursday, April 22nd.
Nightly Business Report is made possible by...
When financial consultants are free to do whatever's right for their clients tend to really appreciate them. AG Edwards, fully invested in our clients.
What does it take to understand a client's business? Experience. We see business issues from every perspective. Deloitte.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
Good evening, everyone. After weeks of worrying about interest rates, corporate earnings took the spotlight on Wall Street today, and stocks took off. Upbeat first quarter numbers from a host of big names put investors in a buying mood, as did some positive news about the economy. The major market indices posted their biggest gains in weeks, with the Dow climbing almost 144 points and the Nasdaq gaining 37. Erica Miller reports.
The stock market shrugged off worries about interest rates today, focusing instead on positive earnings reports. A wide range of companies, including eBay, Caterpillar, American Express, and Qualcomm, all easily beat first quarter earnings expectations. And Boeing said today it expects to significantly top analyst estimates when it reports earnings next week.
Corporations are delivering fabulous profits. They spent 3 years cutting costs. Now the economy is improving, so profits are growing. Profits drive stock prices, and the only thing that could abort it would be, in the absence of excessive valuation, would be if interest rates and inflation started to creep up dramatically.
But today investors were reassured that inflation at the wholesale level still remains in check. Producer prices rose 0.5% in March after climbing 0.1% in February. The March increase was more than Wall Street expected, but traders focused instead on the core rate, which excludes volatile food and energy prices. It rose just 0.2% after a 0.1% gain in February. And in a speech in New York today, Treasury Secretary John Snow also reassured financial markets that inflation remains under control.
It's pretty clear we've got a good, strong, steady recovery underway. A recovery that's going to is creating lots of jobs, but a recovery which is doing so against the backdrop of basic price stability.
Most economists do expect inflation to start inching up as the economy improves. But they say that's not necessarily a bad thing.
We are in a healthy economy where we are able to charge, the demand is strong enough to sustain slightly higher prices. Profits will rise. Business managers become more confident in the business environment and are more likely to be hiring people.
Analysts say that hiring will be key to where stocks and bonds head from here. They say the better the employment picture, the less worried they'll be about rising interest rates. Erica Miller, Nightly Business Report, New York.
And as Erica reported, producer prices were up a bit last month. Even though economists aren't worried about a rebirth of inflation, rising prices are posing some challenges and some opportunities for American companies. As Stephanie Woods reports, it's all a matter of pricing power.
California Tortilla pays more now for chicken, beef, and cheese. The restaurant increased menu prices about 5% last year. Despite another spike in food costs this year, company co-founder Pam Felix says they have no plans to increase prices now.
We want to be able to give our employees raises. They like that too. But the general pricing has gone up generally, so we have to respond to that at some point. But we try not to respond to just fluctuations in the market.
But with long lines and relatively low prices, customers say they will still come, even if prices increase slightly.
10% still come. More than that, definitely not.
Prices for a room at the Tabard Inn are up this year. The hotel was forced to raise prices because of double-digit increases for heating, health, and property insurance. But a pickup in tourism and demand for rooms gave the hotel a chance to charge more.
It's easier to do it when it's busy. I mean, to raise rates, it's a lot easier now because no one really notices it, and then it kind of flushes in, and you don't even, you get less comments.
It's not just hotels and restaurants that have some newfound pricing power. Economists say businesses generally are more comfortable charging more. But not all industries have had success raising prices.
Airlines that haven't been able to raise fares have tacked on a fuel surcharge to ticket prices. Telecommunications companies are embroiled in price wars. Auto and electronic makers also have trouble raising prices.
Your costs are going up too, the cost of materials you buy. But it's much harder to pass them on because they're also being imported from foreign suppliers.
Still, if overhead continues to increase, businesses that have eaten those costs may soon split the bill with customers. Stephanie Woods, Nightly Business Report, Washington.
Well, as we reported earlier, Wall Street's focus moved from interest rates to earnings and economic reports. Trading was choppy early, but when the selling slowed, the market zoomed higher as bulls charged in, and short sellers covered their bets. Cyclical stocks like Caterpillar, the home builders, and the financials all gathered momentum, and the rally held through the afternoon, with the Dow closing up almost 144 points at 10,461.2. The Nasdaq rising 37.25 points to 2,032.91, and the S&P jumping nearly 16 points. The bond market took comfort from the news of initial jobless claims numbers, which suggested some continuing weakness in the employment sector. The 10-year note rising 10/30 seconds to 96 and 29/30 seconds. The yield now at 4.39%. Shares of Yum Brands were a hot dish on Wall Street today after the company reported better than expected results late yesterday. Strong performance at the company's Taco Bell chain helped boost first quarter results by 21%. Besides Taco Bell, Yum operates Pizza Hut, KFC, Long John Silver's, and the A&W restaurant chain. And joining us now from Louisville with more on the company's growth plans is Yum's chairman and CEO, David Novak. Mr. Novak, welcome to Nightly Business Report.
Thank you for the opportunity.
Tell us a little bit about how the company is able to have this kind of growth in profits during the first quarter.
First of all, our international business is booming. Yum Brands has a tremendous international business. We're in over 100 countries, and our profits were up 28% in the first quarter. We have 1,000 KFCs in China, and the China business was extremely strong. The UK business was very strong. We're basically strong in almost every part of the world. In the United States, we also had very good business results, particularly at Taco Bell and Pizza Hut.
Let's talk about the international business, because that sounds like really where the main focus for the company's growth is these days.
Well, it's 40% of our profits today and 60% of what we project in terms of our growth equation, which is to grow at least 10% a year every year. The good news that we announced today was that we're taking our earnings projection up to 12%. So I think that was good news for the street and good news for our shareholders.
The one thing that seemed to be holding results back a bit were the performance in your KFC chain. Talk about the problems there and how you're planning to fix those.
Well, at KFC, we have two issues that we're dealing with. Number one, we want to become more relevant to our customers. We're going to do that by emphasizing our fried chicken in more powerful ways as we go forward. But also we're going to be introducing more new products that give customers more choice in addition to our world-famous fried chicken. For example, we'll be introducing an oven-roasted line of products in the next couple of weeks. The other thing that we're focused on is improving our core operations, making sure that our restaurants are fast, friendly, and as clean as possible.
Now, tell me a little bit about your situation with the low-carb phenomenon. What is the company doing, if anything, differently in terms of what you put on your menus or any impact that you've seen so far in sales from so much of what we see regarding everybody going on these low-carb type diets?
We haven't seen that much impact, to be honest with you, Jeff. Our business is strong. We're on top of the consumer trends. And the biggest thing that we're doing from an overall Yum-wide perspective from the new product standpoint is giving our customers more and more choices as we go forward. More and more options that allow people to eat any way they choose at our companies.
But I'm surprised you're not introducing some sort of new product. I keep reading about how some of the burger chains are coming out with bunless hamburgers and those sorts of things. You guys don't seem like you're really in a situation where you really need to worry about that.
Well, we're not really worried about it. What we look at this whole area as an opportunity. From a new product standpoint, we look at this as an avenue that we can go down that may allow us to develop and introduce some new products down the road. But it's not something that we feel a burning issue that we have to address right now.
Now, one thing that makes your chain or your company stand out from the others, you don't pay a dividend. But it sounds like, based on comments that came out earlier today, that might change in the future.
Well, you know, when we were spun off from PepsiCo 6.5 years ago, we inherited $4.7 billion worth of debt. And we made it an objective to really strengthen our balance sheet. And we've paid down about $2.7 billion the last 6.5 years. And just recently, we were given an investment grade rating by all three of the rating agencies. So our balance sheet is strong. So we're in the position now to, in addition to investing in our core business, which we spend about $770 million a year on in terms of just driving our growth, we're also buying back stock, and now we're strongly going to consider a dividend. But of course, we have to get approval from our board of directors before we do that. If we do offer up a dividend, we intend it to be meaningful to our shareholders.
Well, it sounds like shareholders and a lot of other potential shareholders will be paying attention. So we appreciate your time with us, Mr. Novak.
Well, thank you very much. We appreciate the opportunity to tell our story.
Our guest, Yum Brands Chairman and CEO, David Novak. And now let's take a look at some stocks in the news tonight. And topping our list, Motorola, with almost 39 million shares changing hands, the stock up $1.42 thanks to stronger than expected results. GE rising 15 cents, Ford gaining another 83 cents. Sprint PCS up 4 pennies and Pfizer falling 31 cents. Lucent Technologies falling 6 cents, but Time Warner ended up 15 cents. Mylan Labs up 48 cents. SBC Communications, most of the telecoms doing well today, up 63 cents, and Nokia gaining a dime. Shares in Boeing rising $1.42. The aircraft maker said it should easily beat Wall Street earnings targets of 44 cents a share. It reports first quarter results next week. And here's Caterpillar, which we mentioned earlier, climbing more than 3. The heavy equipment maker hauling in huge profits of $1.16 in the first quarter. That tripled year-ago levels. And Caterpillar's chairman said, quote, "It appears the world economy will have one of its strongest, broadest recoveries in years," unquote. Sales for mining and reconstruction equipment in North America rising a hefty 49%. Shares in Coke sliding 67 cents. Defensive issues were weak today. Published reports say Gillette's chief James Kiltz will stay at his company and not go over to the top job, which is open at Coke. Maxtor falling 91 cents. Seasonal weakness in disk drive sales, triggering a second quarter loss of 4 to 8 cents a share. Here's another disk drive maker, Western Digital. After the close, it posted a 15% drop in first quarter earnings. The stock off $1.27 in regular trading. Great Lakes Chemical climbing nearly $4. First quarter profits, excluding restructuring charges, coming in at 13 cents a share versus 2 cents a year ago. That was on a 10% jump in sales and a nice performance there. Marriott International rising 3.5. First quarter profits fell slightly. but it did have good timeshare sales, apparently doing quite well. Marriott said 2004 profits could reach $2.34 a share. Whirlpool jumping more than 2.5. The appliance maker scoring profits of $1.43 a share. That was a nickel above estimates. And European customers apparently taking advantage of the dollar's weakness to trade up to higher-end appliances. However, not the same story for Maytag. The stock off $1.34. Sales of its Hoover vacuum products noticeably weak, with company-wide profit margins being flat. Reebok International shedding nearly $4. The sneaker makers at first quarter earnings came in a nickel below estimates. Sales gained only 1% for the period. Shares in Advanced Medical up 5.5. Profits in the latest quarter for this one coming in at 15 cents a share versus break-even results last year. It also raised its 2004 earnings guidance to the high end of estimates. And finally, a lot of people getting eye correction procedures lately. Vizx earnings doubling on the first quarter to 23 cents a share from year-ago levels. Over on the NASDAQ, Microsoft rising 50 cents and jumped to above $27 after hours. After the close, the software giant posting fiscal third quarter results that were a nickel above estimates, excluding legal charges. Those came to 34 cents a share. eBay up nearly $8. The online auction reporting impressive earnings last night also gave out an upbeat forecast today. Cisco Systems climbing 78 cents, Intel rising a quarter, KLA 10 Core down more than 2. Third quarter earnings more than doubled, but some are worried about a drop in bookings during the period. Amgen rising 13 cents. Taser, more profit taking there, down more than 6. Yahoo rising $3. And Applied Materials falling 50 cents. Qualcomm jumping more than 2. And here's a look at Amazon surging more than $3. Profits in the first quarter coming to 26 cents a share versus a loss a year ago. Aggressive pricing and that free shipping helping results there. Aris Group tumbling more than 2. Aris makes fiber optic cables and related business products. Some are concerned about the impact on the business with the growing use of internet telephony. And those are our stocks in the news tonight.
Well, Jeff, now for a little tech talk. Tonight, we're premiering an occasional series of reports called Tech Talk, looking at developments in the technology sector. Our New York bureau chief and technology maven, Scott Gervey, will fill you in on industry activities and the latest in neat gadgets. Tonight, Scott looks at a fight over privacy, a duel over documents, and a new item that brings an old character to mind.
31 privacy and civil liberties organizations have now signed a letter calling on Google to suspend its Gmail service. Gmail is actually still in test and not generally available. It offers email accounts without charge to users who agree to accept sponsored advertising along with their mail. The sponsored links are here on the right. To decide what ads to display, Google reads your mail, and that is what has the privacy groups up in arms. Having found Microsoft guilty of antitrust, the European Commission is now investigating Intel. And here in the U.S., Intel's rival AMD went to the Supreme Court this week, asking that it release documents that might help the EC in its investigation. Now, the strange twist here is that the European Commission told the court not to do it. It's afraid of setting a precedent which could be used against European companies sometime in the future. Also in the tech law category, e-commerce giant Amazon is the holder of 1 of 10 patents being challenged by the Electronic Frontier Foundation, a nonprofit group that lobbies on civil liberties issues related to technology. Amazon was awarded a patent for its one-click shopping button. The EFF says that patent builds on prior technology and should never have been awarded. And you'll have more than time on your hands if you purchase the WristNet Dick Tracy watch. Made by Fossil in partnership with Microsoft, these watches receive broadcasts from Microsoft's MSN Direct service. They receive news headlines, sports scores, stock quotes, and weather forecasts. The watches cost about $200. The wireless service runs $10 a month or $60 a year. I was skeptical about this product because it can only receive, but after a few days I found myself glancing at it often to see the latest headlines and market quotes on the scrolling display. I found it to be fun and informative. Of course, you can't actually talk on it like Dick Tracy used to talk on his wrist radio when I was a kid, and Tracy, who unlike me does not seem to have aged, already has a wrist TV. But for now, the Dick Tracy WristNet watch will do. Scott Gervey, Nightly Business Report, New York.
Tomorrow, our Friday Market Monitor guest is Mark Leibovit, Chief Market Strategist of VRTrader.com.
Here's a look at what's happening tomorrow. The G7 meeting begins in Washington ahead of the World Bank and International Monetary Fund spring meetings this weekend. Just one report on the economic calendar, March durable goods orders. And on the earnings calendar, Fortune Brands, International Paper, Schlumberger, Weyerhaeuser, and Xerox are all scheduled to report. Well, when two presidential candidates make the same claim, whom do you believe? Tonight's commentator has his answer to that question. Here's Alan Blinder, partner in the Promontory Financial Group and former vice chair of the Federal Reserve.
Both President Bush and Senator Kerry have pledged to halve the budget deficit within 4 or 5 years. The two promises sound alike, but one of them is more believable than the other. The main reason is a seemingly obscure difference: the budget enforcement rules that Kerry favors but Bush opposes. To understand the issue, we need to go back in history a bit. Ironically, to the landmark 1990 budget agreement under President Bush I. That agreement created two rules. One placed a cap on each year's discretionary spending. The other was the so-called pay-as-you-go rule that required Congress to provide a way to pay for any proposed tax cut or increase in entitlement spending. Those rules turned out to be remarkably effective. In conjunction with the sharp change in budget policy under President Clinton and the booming economy, they helped turn a huge and growing deficit into a large surplus. But then, tragically, the budget rules were eliminated under President Bush II. What a mistake. It allowed Congress to avoid any serious discussion of how to pay for the 2001 tax cut, or the 2003 tax cut, or the new prescription drug benefit for Medicare. You get the point. So there is a difference. Senator Kerry would enforce his budget promises by bringing back the highly successful pay-as-you-go rule. President Bush would not. He just wants us to trust his newfound budgetary probity. Which version do you find more credible? I'm Alan Blinder.
And recapping today's market action, a flood of good earnings reports spurs a rally. The Dow gaining almost 144 points, the NASDAQ climbs 37. And please be sure to join us at our worldwide website, nbr.com.
Finally tonight, the world's largest passenger liner, the Queen Mary 2, steamed up the Hudson River into New York City this morning. It's the new ship's first visit to the Big Apple, and she received the customary Gotham greeting, complete with fireboats spouting red, white, and blue water. She's berthed on the west side of Manhattan in an area about to get a $150 million renovation as part of an effort to revive New York's passenger cruise business. When the Queen Mary 2 leaves to go back to England on Sunday, it will mark a milestone. She'll travel home in tandem with the Queen Elizabeth II, which is making its last transatlantic crossing. It's the first time the two Cunard ships have ever sailed that route side by side.
Well, I was on the Queen Mary 2 back in February. It was docked for a short time in Fort Lauderdale. Beautiful ship, and you can imagine the pictures as those two ships sail off into the... They're not actually going into the sunset. They'll be going into the sunrise,
That's
I guess.
right. Can only imagine.
Well, that's Nightly Business Report for Thursday, April 22nd. I'm Jeff Yasteen. Good night, everyone. Good night to you, Linda.
Good night, Jeff. And that's Nightly Business Report, and we'll see all of you again tomorrow night.
Nightly Business Report is made possible by Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
From assembly lines to power lines to the bottom line, it's experience that counts. We see business issues from every perspective. Deloitte.
When financial consultants are free to do whatever's right for their clients tend to really appreciate them. AG Edwards, fully invested in our clients.
And made possible by the financial support of viewers like you. Thank you. why bonds are favored by conservative investors. In an award-winning video, the NBR Guide to Buying Bonds. To order by credit card, call 1-800-535-5864.
Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following. SAFE Corporation, preventing workplace injuries and helping Oregon employers manage the cost of workers' compensation insurance. SAFE, on the job for Oregon.
Next time on Frontline, he grew up with bin Laden's children.
3 times, my father himself tried to get me to become a suicide bomber.
But Cutter was different.
I don't believe in blowing myself up, killing innocent people.
Frontline tells the inside story